Traders have been watchful of a possible central bank intervention for the yen, as the dollar-yen remains well below 80. Sebastien Galy, Senior FX Strategist from Societe Generale, joins me now. Sebastien, has the yen reached a point yet that warrants currency intervention?
No, it's probably too early, but there's a lot of speculation that there will be an intervention at the upcoming meeting on Friday. However, the Japanese yen has actually not been appreciating much relative to its Asian peers. It's been mostly a story of dollar weakness across the board. It has very little to do with the Japanese yen, hence Japan will find it very difficult to intervene alone in the market and will find very little support at this point in time for such an action. It is simply too early. They will try to jawbone the currency. They have surprised the market overnight with some of the comments that they made, which were pretty somewhat drastic and somewhat unexpected. But their ability to credibly influence the dollar yen for more than a day or two is not that great. Therefore, we would expect dollar yen to move much lower, probably in the 72, 73 area, before we have to be concerned about a potential intervention in dollar yen.
Let's talk about the whole US drama. A deal has been struck on the US debt ceiling, but investors are still very wary about the recovery of the US economy. Where do you see the dollar yen going in the short, mid and long term?
Yes, so we've been the most bearish bank on the market for a very long time in dollar yen, and we think we're probably going to be around 78 for actually quite a while, probably over the next 12 months. So going below and resorbing and moving back, so oscillating around these levels for quite a long time. The reason behind it is we don't think anything very special is going to happen on the Japanese yen side. It's just that the dollar needs to remain weak because of balance sheet adjustments, because they will have to go through a strong fiscal program eventually. It doesn't seem to be the case now, but eventually we will see that fiscal program coming through harder than the one which was already agreed. That will keep the Fed on hold. Dollar demand is not going to be great, and then the dollar will have a certain tendency to weaken. But Japan also has its own fiscal issues, and the competition of the bad would probably think that eventually it's just going to be an oscillation between the two, and nothing really to speak about at this point in time. So 78 seems to be a reasonable level. Probably will dip below as we are currently, but eventually it's just going to be a bit of a random noise.
And what about your outlook for the euro-yen? What are your currency projections there for the short, mid and long term? And what are your reasons behind your forecasts?
We think that the fiscal issues in Europe, whereas they're great, they're not unsolvable. They will probably delay some of the rate hikes coming from the ECB, because simply we're seeing the South starting to tighten very hard because of high yields there, linked to their somewhat uncomfortable credit situation, and that will probably delay activity from the ECB side, which means that the rise in the euro will happen a little bit later, and therefore we think on that basis, euro-yen will just very slowly hedge from levels in 1 month about 113 to levels of roughly about 120 in 12 months time. Just a mild upward trend linked to basically some eventual widening of yields between Europe and Japan.
Thank you, Sebastien. Remember, every day Dukascopy TV will be interviewing top banks and financial institutions, so stay tuned. Goodbye for now.